Hello and welcome to another edition of Investing for Generations. Today I want to talk about investing versus speculation. I will talk about the differences about investing and speculation, and I will give my opinion why investing for random people like me, and I guess also for the most, are just a better discipline versus speculation. So let's go. But before we start, don't forget to subscribe, like, share, and comment. Thank you. So the reason for today's video is my video from yesterday where I analyzed the stock of Workhorse, one of the very much hyped stocks in the electric vehicle sector. And I got some very controversial reactions because for me, a lot of these companies of this sector are just speculation, or if I want to say a bet, and I'm very skeptical about it. That's the one reason for the video today. The other reason is that one of my new subscribers, Raymond, hello Raymond, told me I should do more educational videos. So I don't feel like a teacher. Therefore, I'm not so sure if this is really educational video, because I'm just also a random guy in the internet. But at least I try to give my own opinion on different styles of investing, or trading, or speculation. But Raymond really encouraged me to do another video of this style, of this kind of educational style. I'm very happy Raymond joined the group, joined my subscribers, and I hope you also follow him and subscribe to the channel, and we can just go this way together and go this journey together. So what's the difference between investment and speculation? An investor has a long-term time horizon, a level of moderate risks, and is cautious and conservative. He decided his investments on fundamentals and basic factors. On the other hand, a speculator thinks short term, normally take a high risk, is very aggressive, and his decisions are on charts or on market psychology, like the hype we have now, or individual opinion. That's the main differences between investing and speculation. But the question for me is, do we need this high risk of a speculator to have a good reward? When we follow Warren Buffett, which is maybe not the worst thing to do, it seems like it's not. Because he said, rule number 1 is never lose money, and rule number 2 is never forget rule number 1. So the question is this really a healthy relationship between risk and reward on the other side? So lately we have this big hype in the electric vehicle sector. All of this in the shadows of the big Tesla, of course. And there we have companies like Workhorse, Nikola, Nio, NKLA. All of them make no money or even barely money. Like I explained yesterday in my video about Workhorse, a lot of this is just fantasy, is kind of storytelling, and in the end it's just a bet. And of course, you can win a bet or you can lose a bet. And then, yesterday I got some comments on my video which say, yeah, of course they burn money because they are startup companies, and this is just normally for a startup. And of course, that's totally right. But then think further about it. 90% of the startups fail. So makes it really sense to bet on it? That you are lucky enough to invest in the 10% which not fail and make it? Let's take a look at other hypes in the past. For example, the hype around the cannabis stocks lately. Here, for example, we have the stock of Tilray, which was in the peak at around $120 and now just came back to $7, which is a huge loss for somebody who invested just in the peak. Or the even more famous Aurora cannabis, still one of the most traded stocks at the Robinhood app. This stock was over $70 in the peak and is traded now at $10. Also here, people who just invested right into the hype lost a lot of money. Or take a look at the companies of the dot-com bubble hype. In this list of companies where people lose so much money is so long that I have to make it so small to just get it on one page. And hypes like this happen all the time. All the time this happens, and all the time 90% of these companies just fail, lose a lot of worth, or even worse, have to face bankruptcy. So let's make an experiment. Let's say we invest $1,000 into 10 companies, and as we learned, 9 of the 10 fail. So let's say we make 50% minus with the first 9 investments. That's a minus of $4,500. So the 10th investment just have to make 450% just to come to a break even. Just think about that. And then just ask yourself, is this a way you want to speculate? Is this a kind of risk you want to take? And then answer the question again. Is it really worth it? Or even better, is it really necessary? And is it really necessary to get a good return? And have you really to be right there from the start with these companies, even if they make it, to get a good return? Let's see. Let's take a look on the net profit of Amazon. It took Amazon to 2014 to get stable net profits, and of course the rest is history. And then take a look at the chart of Amazon. And of course, it would be great if you invested in Amazon in 1998 or 1999 and just stick with it to now. It's almost, I think impossible to be not millionaire if you did so. And if you did so, congratulations, but maybe then you don't look my videos. Anyways, it wasn't necessary to be there at the end of the 90s. Even if you start to invest in Amazon when they get profitable, in 2014 or 15 or 16, or even later in 18 or even in 19, you would make a huge gain. The only difference is that in 2015, 16, 17 and so on, you already know it was foreseeable that Amazon will make it. And that's the big difference between investing in these later stages than right from the beginning when the company is not profitable, because then you are not a speculator, then you become an investor. And here just another example. This is an all-time chart of Apple, and just look at it and think about if you had really be there from the start to make a good gain and to make a good return. I think the answer is obvious. So obviously you don't have to take the risk of a speculator, like right now in the electric vehicle sector, to make a great return. If a company make it, you will have a lot of time and a lot of opportunities to buy these companies on their way with much less risk. And this idea leads us to investing and investment. To be a good investor, of course, first you have to find a great business. You have to look at the returns, at the margin, at the cash flow, and on the balance sheet. And then, if you find a great business, you have to calculate the intrinsic value. How to calculate the intrinsic value, I explained in another video. You can find the link here up on the screen. And then you just have to wait until great business is underpriced and it's under the intrinsic value. Even better with a big margin of safety to the intrinsic value, and then buy. And the rest will do time for you, because the stock price always, sooner or later, will come back to the intrinsic value, and at least will come back to the intrinsic value. And if you have a business which makes a lot of money and just then it's a great business, the stock price every time will follow the earnings of the company. Therefore, I say all the time, and not just me, the value of a company is just their future earnings. And what say Warren Buffett about this? Time is a friend of the wonderful business and the enemy of the mediocre. That's it. And time is your friend if you have a great business. How simple is that? And then to finish this video, I want to give you a quote of one of the few famous speculators and investors in Germany. It's Andrei Kostoliani, a man who was born in Hungary and then lived in Paris and also in Germany a lot. And he said, wer viel Geld hat, kann spekulieren, wer wenig Geld hat, darf nicht spekulieren, wer kein Geld hat, muss spekulieren. Or in English, the man who have a lot of money can speculate, who have a small amount of money is not allowed to speculate, and the men who have no money have to speculate. So I guess most of us, like me, have a little bit of money, and so we are just not allowed to speculate. That's my conclusion of all of that, and that's my opinion of this topic. Let me know in the comment section if you agree or disagree, and let us discuss this topic, this very interesting topic, where you obviously can have a lot of views on. I'm excited to see your opinions. That's it for today. If you liked the video, give me a big thumbs up, subscribe to my channel, ring the notification bell to never miss another video, and then we see again on Wednesday then with the analysis of another stock out of my watch list. Take care, see you soon, bye bye.